Reporting transactions. Okay, so we've talked about the investments that how we treat investments, our bank balance, and our insurance. How do we report our transactions here? Okay, so the general rule is we report transactions greater than $1,000 that you made for yourself, your spouse, or your dependent child. Now, I have a question for you. Let's say you invest $200 every month into a mutual fund. So every month, $200 is automatically deposited into your mutual fund. And at the end of the year, you've made investments totaling $2,400. Do you have to report the transactions? After all, we've aggregated everything else so far. It would make sense to aggregate the transactions. Here, the rule is we do not aggregate. So I got good news for you here. So this would not be a reportable these transactions would not be reportable. You don't aggregate the transactions. So you only report transactions if the individual transaction is $1,000, more than $1,000. Okay. So if you have your account set up for dividend reinvestment, that's another way this issue can come up. You only have to report it if the individual transactions investing the dividends are more than $1,000. Okay, so don't aggregate. Now, the other thing you have to be aware of is if you're buying individual stocks and bonds, you also have to file a 278T when you make the transaction. Okay. Now, the general rule is if you've already reported something on your 278T, you don't also have to report it on your annual 278. Okay. Office of Government Ethics says you've already reported that transaction. We already know about it. You don't have to include it on your annual 278T. On your annual 278. One exception. Some agencies will require you to report your transaction both on the 278T and again on your annual 278. So if you are buying individual stocks and bonds and you have to file a 278T, check with your agency to see if you have to file it and report it again on your annual 278. Okay, if you're buying exempted investment funds, you don't have to file a 278T. Just report it on your annual 278. Now, I'll give you a little tip here. In our practice, you might be looking at this going, wow, there's a lot of detail here for these investments that I have to report about the information I have to provide about the investments. I have to provide information about transactions. This is a lot of information. It is. In our practice, I'm going to give you some tips that we use to avoid to help you minimize your reporting requirements. Avoid strategies that result in frequent trading. Okay. Avoid trying to time the market. Avoid trying to pick the next hottest stock. Avoid day trading. Okay. These things are going to make your financial disclosure requirements a lot more burdensome. Okay. In our practice, what we recommend is clients pick an allocation that's appropriate for their age and their risk tolerance and stick with it. It is both good for your finances and good for your financial disclosure reports. Okay. It's going to make your life easier.